Hello, today is Thursday, and it is the 7th of June, 2012. Let's take a quick look at silver, gold, and the Dow Jones. And the movement yesterday was very close to the 30 handle, but not quite. Therefore, it was a pierce below 30. And this most recent level of resistance is now being tested. Mr. Ben Bernanke does say a few words today. Whether he's doing that now, it's basically a little after 10:15 a.m. Eastern time, as I'm stating it. I'm really not too sure. However, this is interesting how this first comeback test is going to make out. Yesterday was the first day since the market turned over that the price action had the lows. The lowest level stayed above the 18 average of closes with a close above the 18 average of highs. So basically, it stayed above here and it closed above this line. First time that has occurred. So now the old precedence is, how is this going to play out? You have to watch out for that fake move, because it's very easily that the possibility that this is the first failed move before the breakdown. And then if you're saying, well, if it's usually a failed move, well, in a sense, then even this here could have potentially have brought us that failed move. The old adage is, now that we've had this retracement, that if it does successfully find support here, or really anywhere in this area, 28 even, and manages to move back up to this 30 level, that it increases the chances that it takes it out. And if it successfully does that, the next level is 32.66. And from 30 to 32 and 2/3, the most relevant support level is roughly at around 31 flat. Okay, let's move this on now to the gold chart. And gold had its resistance at its Fibonacci level, but it didn't take one day like silver did with a pierce below. No, it had a full day last week on Friday where it hit that level, and then 2 consecutive days in a row, which was Monday and Tuesday, where it had the very, very tight consolidation within this. Tried to break it yesterday and obviously didn't, and is now breaking off. So now it's having its support level. When you see this take place, you say to yourself, well, what's the important lows? Is it the breakout lows or whichever? And then how well is it going to perform its correction? Because just like silver, if it manages to come back towards this level with the higher low, it does look likely that it would take that level out, and breaking through that, you go to the next one, which is up at 1685. That now finally, I was talking very quickly yesterday about the Dow. This was yesterday's chart, and today I should have an updated one. There we are. And as of 10:07 a.m. Eastern Time, it has managed to get up to this level. So if you're looking to play the game Fibonacci retracement, if you did go long at 12:1, then obviously this little small move was not enough to shake you out. And the question is, do you sell at this point? And quite frankly, that if you're looking to buy on weakness on the way down, then it should be an area where one would sell. I don't think it's an area that you would particularly look for a short position. I do think that a move up to here you would, if you're looking for a good risk-reward kind of play with good probability odds. But in here, it's now, how as well is this going to react? Because just like gold and the Dow, or gold and silver, if it does make a bounce back and then brings a higher low and then comes back to this level, chances are increased you take it out. And then the next significant level is the second Fibonacci line. I'll try to put out a second video today, as I have no idea what time Mr. Bernanke speaks at, and unless nothing goes on today, I'll try to put one more out later on. Take care.